Tesla and Nvidia are absolute legends, with a history of skyrocketing growth. But the big question is, can they keep going? Right now, AI hype on the stock market is at its peak. That's why today, I'll show you 3 other stocks that, unlike Tesla and Nvidia, you can get into before everyone else catches on. The most exciting one went public just a few days ago. Do you think you can guess it just by looking at the logo? Drop your answer in the comments. I'll save that gem for the very end, so stick around, because it's worth it. Hey everyone, my name is Matthew, and welcome back to another investing video. And don't worry, I'm not here to sell you my portfolio. What you decide to invest in is completely up to you. What I offer is the perspective of a tech enthusiast and investor looking at today's most interesting opportunities. But keep in mind, investing always comes with risk, so please, invest responsibly. Alright, let's dive in. We'll start broad, then go company by company. As you can see, the entire S&P 500 is sitting at an all-time high. Just in the last quarter, it gained nearly 10%, so the mood is definitely optimistic. And for tech, that's even more true. Take Bitcoin, for example. It's also at a record height for the second time in a row. I won't spend too much time on Bitcoin today, but credit where it's due. It's acting almost like another tech stock in the market. Now the big question is whether, in the long run, things will change, and if we'll finally see that legendary decoupling, where Bitcoin breaks away from the rest of the market. Alright, let's take a closer look at Nvidia. By now, almost everyone's heard of it, but Nvidia has moved far beyond just serving regular consumers. Today, the company's market cap is over $4 trillion, making it the most valuable company in the world, and that value just keeps climbing. In the last quarter alone, Nvidia added more than 30% growth. So how exactly did it pull off a 300% jump in just 2 years? And maybe even more important, does it still have room to grow? The simplest way to explain Nvidia is this: it makes chips. And who buys those chips? Basically, the companies right behind Nvidia in market cap. Microsoft, Amazon, Google, Meta, all of these giants are powered by Nvidia chips. Nvidia is the undisputed leader in AI platforms and development. And today, if you want to do anything meaningful with AI, you absolutely need Nvidia hardware. The company keeps pushing innovation too. In fiscal year 2025, it doubled its revenue up 140%. And so far, there's no sign that this trend is slowing down. I really believe it's still a solid long-term investment. Now sure, buying in today means you're basically getting it at the top, and that might feel uncomfortable for some investors. Plus, there's always the risk of a correction. But big picture, I think Nvidia will remain the leader in its space for quite a while. And right behind it, we've got the first stock I want to highlight today. One that might be new for some of you. So if you're new here, don't forget to hit that subscribe button. I'm talking about Nvidia's challenger, AMD. They are not quite on the same level yet, but they are trying hard to compete. If you had invested in AMD 3 years ago, you'd definitely be happy today. At its peak around mid-August, the stock was up about 80%. Not as crazy as Nvidia, sure, but still a solid return. So while AMD has been growing, it hasn't exactly skyrocketed like Nvidia. Right now, the stock is recovering from a correction it went through a few months back, and it's climbing back toward the heights we saw in early 2024. So no, AMD isn't trading at record heights, but in terms of company performance, things are looking strong. They're breaking records in the PC and gaming segments, and they are even more diversified than Nvidia, because unlike Nvidia, they also make desktop and laptop processors, not just graphics card, and they are starting to catch up with Nvidia in AI chips and acceleration as well. Just like Nvidia, AMD has partnership with OpenAI, Meta, Microsoft, and even some government-backed AI projects. Now here is the interesting part. Because AMD is valued much lower than Nvidia and has a broader product base, there is theoretically more room for growth. Right now, AMD sits at number 34 by market cap with a valuation of just under $300 billion. That's more than 10 times more than Nvidia's $4 trillion. And unlike Nvidia, AMD tends to offer more affordable and more open solutions. Think of it like Apple versus Android. At this point, Nvidia is the Apple of AI, while AMD is more like Android, a great alternative that challenges the market leader. I mentioned Tesla earlier. It's one of my favorite stocks, and in the past few months, a lot has been happening with Tesla. The scaling of their robotaxi project is getting really interesting. Tesla has started serving another huge area around San Francisco and St. Joe's, better known as the Bay Area. This area is much bigger than what their competitor Waymo currently operates there. But of course, there's one big catch. Tesla doesn't yet have permission to run fully driverless cars in this region. So if you call the Tesla ride-hailing service, they can't even officially call it robotaxi yet. A Tesla will pick you up, but with an employee sitting in the driver's seat. From a technology perspective, though, the driver is often doing nothing at all. There are tons of videos showing them just sitting there with a full self-driving supervised switch on. The cars are basically driving themselves. But from a regulatory standpoint, a human still has to be behind the wheel. So yeah, it's kind of funny. And of course, it gives ammo to the bears who laugh and say Tesla is just running a regular taxi service with no real innovation. But let's see, a few months from now, maybe next year, we'll find out who's laughing last. We've also seen a few new videos from Europe, especially the UK. In Swindon, for example, Tesla tackled this insanely complicated roundabout setup. 7 roundabouts in total, 5 small ones where you go one way, and 1 big one where you go to opposite direction, and Tesla handled it 3 times in a row, without a single driver intervention. Keep in mind, in the UK, the steering wheel is on the right, and traffic flows on the left, so everything's flipped. But Tesla's self-driving system is so robust that it managed it without any issue. Another big update for Tesla. Elon Musk just announced he's shutting down the entire team that was working on the Dojo supercomputer. That means the whole Dojo 2 project is over. For years, Tesla tried to catch up with Nvidia in the AI data center chip game, but now they decided to walk away from that side project. Instead, Tesla wants to focus on consolidating their inference chips, the smaller, less powerful ones inside the cars that handle self-driving. The idea is to take 16 to 30 of those chips, put them on one big board, and essentially turn them into a supercomputer, all on the same foundation. This way, they can merge 2 teams into one, and try to do it in the most efficient way possible. Like Dojo, this is still very risky, and it's hard to say if it will actually work. But at the end of the day, this isn't make or break for Tesla. It's not as essential as solving full self-driving or building the humanoid robot Optimus. If it works, great, it helped. If not, Tesla will move on. On the top of that, Donald Trump also announced that starting around September or October this year, the massive EV tax credit in the US will end. Up until now, if you lived in the US and bought a Tesla, you could get $7,500 written off your taxes. That's a pretty big deal. But that incentive is going away, and not just for Tesla. It's ending for all EV makers. And let me remind you, pretty much every traditional automaker, like Ford or Stellantis, is still selling EVs at a heavy loss. We are talking tens of thousands of dollars lost per car. Now they have to swallow another $7,500 hit without that tax credit. So the question is, how long can they keep this up? How sustainable is that business model? I'm really curious to see what happens, but at least in the US, this definitely doesn't look good for Tesla's competition. Škoda just released the new Elrock, a really nice, well-designed car. Same with the Enyaq, it looks great, drives great. But here is the problem: the software, the infotainment, the smoothness of the touchscreen, the overall user experience. It's still behind Tesla, and I feel confident saying that outright. Right now, I see Tesla like a spring that's been held tight for a long time. If you look at the stock over the last 3 months, it's basically moved sideways. We are still sitting about 30% below the all-time heights of $480. But notice the pattern. Tesla tends to move in waves. From 2015 to 2019, for example, the stock went sideways for 4 to 5 years, and then boom, a massive breakout of around 1,500%. Absolute madness. And since that boom, the stock has again been moving sideways for 4 to 5 years. So the big question is, when will the next breakout happen? Or will it even happen at all? It could come at any time. Another thing investors are waiting for is the announcement of Elon Musk's new CEO compensation package. That's expected this fall, around the shareholder meeting. That's when Tesla will set brand new, ambitious goals for Elon, and he'll only get paid in Tesla stock, not cash, if he achieves them. So that will give us a much cleaner picture of Tesla's direction and of its leadership mission. And then it's all speculation on whether they'll actually deliver. Now I have to remind you about today's second biggest bombshell, and then we'll get to number 1. so make sure you watch until the very end. And that, of course, is Duolingo. Over the past 3 months, the stock has gone on a massive sale, down 38%. At that point, the price action really speaks for itself. For me, when Duolingo went public, it was a product I had already been using for 2 years, and it symbolized a brand new era in its industry: language learning through technology and gamification. Duolingo started as a simply language learning app with a cute little owl, Duo, but today it's grown into a broad educational platform. The company has made it clear their mission goes far beyond just language learning. They've added courses in math, music, even chess, all presented in a way that feels like playing a game. What makes me especially bullish on Duolingo right now is how quickly they adopted generative AI. To me, it's truly a hidden AI stock. They've rolled out Duolingo Max, a subscription tier where students can chat with an AI tutor or get their mistakes explained by a virtual teacher. And honestly, I believe this is the future of education. We won't have one teacher for 30 kids anymore. We'll have one, maybe 5 teachers for one child. And Duolingo is right at the top of this massive revolution. Looking at their shareholder letter, we can see several quarters in a row of an unprecedented growth. Daily active users up 40% year over year, paying users up 37%, and net income up 84%. So for me, Duolingo is a sleeping giant, still relatively young, and absolutely something you can invest in early. Duolingo is also making a big push into China, its fastest growing market, and you should never underestimate China. It's hard to really wrap your head around. But think about this: Europe has about 500 million people, the US has around 330 million, and China 1.4 billion. That's nearly double the population of the Europe and US combined. Absolute insane. And this applies to all kinds of industries, including automotive, like Tesla. If your product can break into China and compete there, then you know you've got something powerful. Duolingo has managed to blend technology, science, learning, and playfulness to completely disrupt an industry once ruled to textbooks and traditional courses. Its competitive advantage comes from its massive user data, its strong, recognizable brand, you know, the little green owl, of course, and most importantly, its lightning-fast adoption of AI to improve the scale of its services. From an investor's perspective, Duolingo has reinvested almost everything into growth so far, but it's now proving that it can also be profitable at scale. If you believe that education will keep moving toward digital, global, and gamified learning, then Duolingo is on track to become the #1 platform for learning anything, right from the smartphone in your pocket. And now, my secret new stock pick, the one you've all been waiting for. I don't even have it in my portfolio yet, so I have to make a tough decision on what to sell in order to grab this gem. Or maybe I'll wait just a little longer. We'll see. That stock is Figma. It's so new that isn't not even available with my broker yet. Hopefully, they fix that soon. And the only reason I don't already own it is because until very recently, it wasn't even publicly traded. That all changed at the end of the July 2025, when Figma had its long-awaited IPO, initial public offering. The offering price was just $33 a share, but on the very first day, it skyrocketed about $120. Since then, it's pulled back, so right now, you could call it on sale from $122 down to $80. Of course, it's hard to say if that's a bargain or not. Right now, its market cap is about $39 billion, still tiny compared to the other giants we've talked about today. So, what exactly is Figma, and why is it such an exciting tech stock? Figma runs on a software as service model, just like Adobe. Most people in the investing world don't know much about Figma yet, but creatives and designers, they know it very well, because Figma is the leader in collaborative design. It runs right in your browser, no downloads required, and lets you work and collaborate with teammates in real time. It also has an incredible generous free plan, kind of like DaVinci Resolve, so you don't need to pay a cent to start using it. Among designers, Figma is a phenomenon. I'd even call it a cult favorite, and frankly, I'm surprised it didn't go public sooner. So definitely take a look at it. What do you think about Figma? What's your take on Tesla and Duolingo? Drop your thoughts in the comments. I'd love to hear your perspective. That's it for today. Thanks for watching, and I'll see you in the next video. Bye for now.